All right, good morning once again, everyone. Thank you for being with us. Today is Tuesday, July 28th, 2026, and this is our audio addition to our daily trade strategy briefing. NFA compliance rule 2-29C subparagraph 1. Y'all familiar with the risks associated with trading? Past performance here is not necessarily indicative of future results. Trade with money you can afford to lose. If you want a deeper review of the compliance rule, you can find it under that heading there. I'm sure you'll all go to it right away. Can't wait to read all the details. All right, good. So let's kind of review where we are today. So yesterday was a cycle one, and again we had our this Globex gap up that hit right into the money box here. All right, that provided an extraordinary short opportunity, all right, for those that have that on their game plan. And again, if you don't have it on your game plan, that is fine. All right. Remember, you don't have to hit every single trade setup or structure that, you know, the methodology here affords you. Right. Again, explore, experiment. Again, you can go back. One of the things I always recommend, and again, we have historicals that we can, paint on the chart here. So go back, take a look, what happens when price typically goes into those areas, right? Do some core research, some basic research, all right, for yourself. Get it, get a feel for an understanding of how it works. And again, just because you see others, post winning trades on these things, okay, again, all that is designed to inspire you, right? Not to do anything else but to share what others are doing. I'm going to have some ideas. We're going to probably do a small little short webinar soon. I have some ideas that I think the overall community will embrace. I'm not going to talk about them here today, but I was listening. I took my walk yesterday. I usually walk 5 miles, and so during lunch I went out and took a walk. And so during my walk, I was listening to, everybody know Dr. Brett Steenbarger. Okay, many of you probably do. Okay, so I was listening to him. Actually, he's the on-site trading coach psychologist for SMB Capital. I know Mike Bellafiore. I know a couple of guys over there. Not really well, but right. Uh, but in any event, uh, Dr. Steenbarger, I was listening to a couple workshops he was presenting while I was walking, and I got some really great ideas from him. So uh, I was actually thinking of implementing, perhaps, kind of passing those things along, and I think you guys will embrace it, right, in a big way. And some of you have actually already reached out to me regards to this, but trading is can be a very solitary, endeavor. But we're all here as a team, as a group. And one of the things that, one of the takeaways from one of his workshops was uh, learning from others. Okay, learning from others. So, kind of one of the ideas, and you can probably implement this right away for yourself, but one of the ideas would be, out of your trading day, at the end of each trading day, write down or post wherever you're going to post, maybe a personal diary type of thing. Post one thing, just one thing that you did very well. Doesn't have to be a list. One item. And on the flip side, identify one item, and it has to be a process item, not a P&L. It has to be a process item. And then on the other side, write one item only that you did during the day that you didn't do so well, that you need more focus on. Just one item on each. Okay? That's it. Not a list, not a laundry list. I should have done that, should have done this, etc. Just one item every day. Okay? And then what you'll find, and again, it could be the same thing each and every day for that matter. We don't know. But select one item on each side. That way you can begin to focus on each of those. Maybe something new the next day. You may uncover something different. So then the idea, what they do over at SMB is they get together in a group, teams, and then they discuss. Each of them goes through, each trader goes through, their positive and their negative items, all right, and they discuss them. There could be overlaps between traders. Actually, what they found is there were several overlaps, right? So we begin to learn from each other, and then you obviously encourage each other and find ways of you know getting past the various hurdles that we're encountering in our trading. Okay, so again, those are just some of the quick takeaways. As I was walking yesterday, looking at the beautiful landscape and the water and everything as I as I walk along the trail. Um, so I'm kind of thinking perhaps maybe at some point we all get together, have some sort of conversation about what can we do to help each other. So again, some of you have already reached out to me, as I mentioned earlier, about pairing up. If others would like to pair up with somebody else, okay, um, we can maybe do that, to kind of kick it off with some sort of a webinar, workshop ourselves, and then everybody. And again, this is obviously our own community here. We all have issues, me as well as myself. We all have issues, and we're here to just try to work, do the best we can and get past many of the hurdles, that are presented to us every day. Okay, so again, trading can be a very lonely endeavor, but when we work as a team, knowing that others are help supporting each other, right? Then you know it becomes the strength becomes um, very powerful. Okay, so something to think about. I'm not going to go much more into detail of that, but I was just wanted to bring it to your attention as something when I was listening to Brett Steenbarger there, as like you know um, a lot of good stuff that we can perhaps kind of um, imitate. Okay, take away from a lot of the stuff that they do to help us. So, anyways, think about it. If you guys have any thoughts about any of that, pass them along to me, and again, we'll move forward, of course. All right. So that said, let me just go back to our prep here. So again, quick review, all right? And so we got, basically our gap fill from yesterday and all the way back down to the lower D level, right down here where we got a bounce, right? So again, the D level money box zones really paid well yesterday. They don't always, get both sides like this, but you know, uh, check it out, right? Okay, cycle day one low now is in place. We have a cycle day two on deck. Today, overnight lows hit. I think I head down to the 25s, and then the upper target, or at least one of the targets I had was 60, right? 25s I had, and again, the line in the sand again today, right, is 45. It was 45 yesterday. All right. Yeah, that's his new book, Positive Trading Psychology. That's his brand new book. So if you guys are interested in getting it, I get nothing from it. So go right ahead. All right. All right. So again, line in the sand 45. Remember, plus or minus, 5-ish. All right. So we're basically kind of in this, uh, kind of consolidation pattern here from the overnight. And again, that is very much in alignment with cycle day 2. Now let's take a look at the value zones here over the past, few sessions. Look at the value zone, right? The value zone, when the value zones are overlapping each other like they have, it basically forms a range, right? Remember, the value zone is approximately 70% of all the activity. I look at the value zone very in a very important way. All right, you have the high low midpoint even of a value zone that we should be mapping out. But when the market gets like it did when it got out of balance on yesterday's gap up or Globex evening's gap up, it's basically out of balance. All right, and again we talked about where it reached the prior zone up here, and of course got rejected. All right, but it's out of balance. The market likes balance. It just does. I don't know the technical reasons. I just know that it likes balance. This is where balance is where the majority of the bigger institutional folks will play, can play. They have the liquidity. Yes, the market can, get out of balance and so forth, but at the same time, typically the market gets into an area, kind of reprices what's considered value, and then begins to trade in a particular zone. All right. So what do we have then? All right, we basically have this zone between again call it 65s, plus or minus, right, and then down here towards the 70, really 7400, 7420s, 15s. Okay, again, that's just an outline. All right, so the market can certainly go above and below. But basically, we're in this balancing area. Now, given that it's cycle day 2 even, okay, we're looking for, what are we looking for? Are we looking for a trend today? Could happen, could develop, but are we looking for that? Is that the, first expectation? I think not at the moment. I think right now, the rhythms that you have, during the overnight are what will, spill over here into the RTH session. All right. So what are our parameters? Well, we got our 45s, we got basically 65s, we got 15s or 25s down here. All right, and then we'll just take it from there, one step at a time. All right. Questions, comments, considerations? All right. Just stay nimble. Let the market, again, we did this yesterday. Let the market show us what it wants to do, and then we'll respond, accordingly. All right. Thank you, Ron, for the Amazon link, Positive Trading Psychology, Dr. Brett Steenbarger. All right. Again, that is his new book. And again, he actually talked about some of that in his presentation, one of his presentations yesterday. I have not read it, but I'm sure it's a very good read. All right, let's have a good session. Dingity ding ding in just a moment. Cycle low alert. Hey, good morning, Mark. Hope your summer is sizzling. All right, very good. All right, so being a line in the sand, 45s again. We got VWAP right now about the 41s, plus or minus. Okay. All right, very good. So again, just right back down to kind of midpoint area. All right. Yeah, that was actually, Ram, one of the presentations that I was listening to yesterday on YouTube during my walk. So if anybody wants to bookmark that or watch that, not while you're trading, but during your off time, that was one of the videos. It was either that or listen to music, and I decided to listen to him. All right, so just hanging around the middle at the moment. I don't really have a core edge at the moment. Yesterday we had a nice rotational day. Today a little bit, looks like it's going to be a little bit tighter action, at least the early going. So an MATD type rhythm, market or morning after trend type day. So should not be surprised with this. Nicholas, what time are we meeting today again? Okay, 5 Eastern. Okay, okay. Okay, that's fine. Okay, thanks. No rain in UK since June 11th. Woohoo. Yeah. Europe is sizzling, right? We are as well. But of course, it's summertime. What do you expect? A snowstorm? All right. Again, I'm just sitting here at the moment. I have no position on. I mean, we do have a premium there, but it's like right in the middle. Certainly can work. Uh, Not my favorite play, but it's there if you want to probe it. Just because it's not my favorite doesn't mean you can't do it. Right? And as you can see, it did work. So be sure to trade your plan accordingly. So the market's just going to kind of probe, upside, downside. They're just going to try to find where, there's responses. How far that, right now the sellers are kind of pushing it. So they need to find, okay, how far can we push this before, we get filled and buyers step in, and then vice versa. They probe back to the upside. Okay, again, they're trying to get a feel of where some liquidity is. We used to do when I was market maker, we used to do this quite a bit. Um, when particularly in the early part of the morning, if I didn't have an actual customer order, institutional order that I was working on behalf of, all right, a lot of times what we would be doing is just as what I'm describing is, we're looking like, okay, the market looks like it wants to go lower. Okay, let's go hit the bids. I don't have an order. I'm just hitting the bids on the company's behalf. All right, I'm just going to smack the bids, see how far we can push it. You know, do I get easily, if I go out there with, 100 contracts or 2,000 contracts or whatever, you know, how easily can that move price, right? And, you know, by doing so, are others, you know, jumping on board in the same direction, or am I getting stopped? You know, am I getting absorbed easily? All right. So a lot of times, you know, we do that. And I think in the same, you know, case here, there's not necessarily a big institutional flow right out of the gate. I think a lot of it still is market makers, you know, kind of just moving things around, see how far. And again, it gets people off the sidelines, right? And of course, they know the book. They have the book. They own the book, just as I did when I was a market maker. So much, it's so much easier when when you know where, you know, big players are. That's market intelligence that we don't have. But what you can do is you can say, you know, again, what we do in the kind of in lieu of that, you know, what's the lean, right? We can kind of do something similar, and that's what I'm trying to always get across and with when we're looking at the markets, like what's the lean? Okay, looks like the path of least resistance perhaps appears down. Okay, certainly I don't want to buy that if the path of least resistance appears to be down. Again, we can use our, you know, EMA river, right, as a, you know, pretty solid guide. Remember, VWAPs are just that. It's not, you know, it's not a line in the sand. It's not necessarily going to hold, right? So you got to be careful. Just because VWAP is flat, that actually tells us that the market can move away from that easily. When that VWAP has, you know, a decent slope to it, then it acts, you know, as support or resistance when touched. So again, keep those things in mind. All right, very good. All right, looks like we want to retest the overnight low, which is at 19s, and then of course we have the cycle day one low at 16 quarter. So it looks like the overnight low to be tagged. Yeah, if you were to measure the dynamic money box, bring you down to the tens. Hmm. All right, so there's the 25s, right? 74.25 is one of our levels, right? Per the daily trade strategy. Yes, yes, yes. And then just write the bullish case. Can't type the bearish case without the bullish case. All right, those are the two cases for today, with the line in the sand at the 45s. The 25s tagged, and then we got 15s, and then down to the old 5s, which would be very, very close to the D level. All right, there's some jibber jabber out there about possible rate hike, surprise rate hike Don't know how true that is. Again, one of the brokerages. I don't know. I think it's Citadel. Somebody out there, or JP Morgan. One of those guys. Right, kind of talking the potential for an actual surprise rate hike. So we'll see. All right, so again, down to the 25s, 15s the next, 05s would be down near the D level. So those are the actionable areas on our radar. All right, coming down to the 15s, overnight low. All right, nice little response from the overnight low right against the prior low, overnight low. And again, that would be a normal expectation, would it not? Prices get near the prior low. People have been shorting it on the way down. What are they looking to do? All right, I'm going to start covering into that low. They're not necessarily going to wait for a kind of a D level look below. Some may, but many will just cover into that low or near to that low. If of course, if they've had a nice position from higher, from further up. And away we go. All right, so just trying to find some sort of two-sided response right up against, again, you can see right up against VWAP. All right, they stop it. Also the A10, but the A10 was already a valid A10 from earlier. Who's beeping outside? All right, starting to find a little bit of balance in here at the lower edge, right around our 25s. All right, there's today's briefing link. All right, so they pushed it up to the 40s, down to the 16, so 15, 16s. We're just kind of hanging around the 25, 30s. All right, just trying to frame it out. So again, VWAP would be, right now 38.40. So, again, continue to ask yourself, who kind of has ball control right now? Ball control still in the seller's hands. They pushed it down here, but again, yes, to sell some, but also to find where there's, responsive buyers, right? They need to probe where there's ample buyers for whatever they might have for sale. So since they pushed it down, meaning the sellers pushed it down, right? The onus is on them, right? And we don't know how much supply they have collectively, right? So the onus is on them uh, to keep probing for buyers. And so the lean, stays with them. If any of you are tennis buffs, the lean can be equated to advantage, right? The ad goes to the sellers. If any of you tennis buffs out there. Big tennis community around here. I got tennis courts just like 2 blocks over. Not public tennis courts, they are private. But it's a big tennis community. They have boats out there moored off the shore. But I think it's just for show. I don't think anybody here is a mariner. They don't know how to row a boat, let alone use a motor. So they're all in their moorings. It looks great, very picturesque. But I don't think they're boaters. I never see any of the boats actually leave their moorings. I'll take a picture of the tennis courts next time I go walk by there. And all the debutantes in their little white skirts. All right, sellers in control. Yeah, again, the uh, pasting screenshots right now is unavailable. Okay, Marlon does know about it. So you cannot paste any screenshots anywhere. You can paste links. Screenshots do not take. So the problem is not on your side. All right, so we found some sort of balance here. Again, we'll see if the sellers, you can actually see they continue to, any little pop, all right, they're getting filled in. All right, but again, they are, encountering, a responsive buy area. So it's just going to be who has the, bigger cojones here. Yeah, yeah. Images are not available right now. Screenshots. So given that it is a cycle day 2, are we, is price experiencing kind of that, two-sided MATD rhythm? Yeah, I'd say so. Kind of reached an area low into the recent range. All right. Again, we'll see if it cleans that up and moves back up to the upper part of the range, but for now they are encountering buy responses back in the lower edge of the recent range. So overnight range in back into yesterday's range. Yeah, we're kind of stuck in this range for a while. I mean, yeah, what would it take to break that range? You know, I don't have an exact number. I mean, I'm kind of, roughly looking at roughly the 60, 65s. If you recall, last week there was this area of, between 50s and 70s, that was that we had talked, quite a bit about. But yeah, so 65-ish. I mean, again, it's hard to put an actual number on it, but if you could say, 50s, 70s. I mean, again, what it needs to do is needs to clear these, these upper areas of the value of the current value zone. Okay, And again, even if they are able to do that, right? They have to build back up into the previous consolidation area, right? So there's quite a bit of consolidation in a very wide area, but in kind of stair steps, right? So I mean, if you're looking for kind of that bigger picture, that makes sense. Uh, Yeah, it's good to outline it, to see. All right, we got what's the time zone? We got the time two zone, 10:08 to 10:12. Looking for some sort of move here. Okay, and again, it's not like the previous moves where we're at an upper and lower edge, and then we get a nice reversal move. But again, 10:05 typically is some sort of a 10:05 to kind of 10:12 is usually some sort of a shake and dance type move. Again, I have not done much of anything here today yet. All right, so I'm in kind of watch mode. Yes, there has been a few, if you want to nibble here and nibble there. All right, so yeah, these type of days, if they tend to chop you up, then just be patient with them, right? I mean, you could obviously, there's a lot of things you can do, right? You could place your raise, your zones, you can outline, again, frame it out. All these things, are actually very good to do, right? So, frame out a prior pivot high, frame out a prior pivot low, okay? And then, again, just suggestions here. If you say, well, we're in this kind of range, so if it gets up to the prior high, right, I'm going to nibble. Okay, I'm going to nibble on the short. Or if it gets down to the prior low, I'm going to nibble on a long. Okay. Again, doesn't need to be your entire position naturally, but if you wanted to do stuff like that, that's certainly acceptable, right? And again, getting experience trading ranges, the only way to get experience trading ranges is to what? Trade the range, right? And of course you can do that with, you know, Sim 101 and be totally kind of without any financial risk on that, right? Or, you know, you put a little bit on the table, little skin in the game, and you don't get hurt, badly if it goes against you, you know. That's all. Things like that. It's so much easier to be an analyst, isn't it? Why do you think analysts are not traders and traders are not analysts? Analysts, right? It's so much easier to be an analyst. An analyst. Bruce F says both PTG bull and bear targets hit. Yay! It's like we know what we're doing. Yeah, the cure for high inflation is what? Higher inflation. Uh, Gotta love the Magic 8 Ball. I consult it every evening. Only the Magic 8 Ball. No Ouija board. I'm not into black magic. I don't know if black magic is true, but I guess I'm not willing to explore that area. The only thing I like about black magic is Black Magic Woman by Santana. For your listening pleasure. Yep. Yeah, Fleetwood Mac did it first. I like Santana's version. The NASDAQ 100 is poised to enter its correction with a 10% drop from the record high. Ooh. Yeah. Yeah, I wouldn't, I'm not gonna. I know. Well, we all know tech is a crowded trade. It always has been. What is it? Roughly 28% of the S&P. So, and that's the reason why the saying that so go Nasdaq, right? So goes the market. So true. Is it 38%? Did I say 20? It's 38% now. Okay. Freaking third of the market, right? It's frozen on your screen. No. It's got to refresh the entire chart. That has to do with it, probably data or something. Yeah, it has to do with the data. Everything. Make sure, again, make sure, guys, you see down in the bottom right hand side, all right, you see this green little block, all right? So make sure, you can see it on all the charts, right? Make sure your slider, right, the slider at the bottom of the chart, okay, is far right as it can go. Sometimes if you have something that's frozen, it appears frozen, it's because the slider is not over to the far right. And then when it's not over to the far right, you're going to see a red block. Does everybody see what I'm talking about? This is on Sierra chart only. All right, so be sure that your chart slider is all the way over to the right. Okay. I mean, sometimes it can kind of, even when you push it there and you kind of release it, all right, sometimes, it just inadvertently goes right to red. And then, again, that has to do with keeping the margin, over at the far right. So just use like the little arrow on the far right to just click, 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 and so it stays green. All right, that'll assure you that everything is right justified. And then if you're using like the OTA loop screen, okay, again, that could be, just, I mean, one block alone will, everything will appear frozen, you know. So if that helps, great. If things are still frozen, it's probably because you're not getting data or something that's coming in. Yeah, open range on the NQ so far did its job. Let me bring that in view. There you go. Here's the open range on the NQ. 2 targets filled. All right, so just bring that into view for everybody. Crude oil got stopped, and I believe we're still we got stopped on the ES as well, or at least partially stopped. Looks like. Oris, are you in the room this morning? Is Oris in the room? I don't see him. All right, where do we go from here? This is not the rhythm that I care for, but so we're just being patient. They're talking about a surprise rate cut right tomorrow, 25 bips. Uh, Citadel Securities have been saying that. Well, if it's such a surprise cut, I guess it's not a surprise cut anymore if they do, right? Because everybody's been talking about it. I guess it's not a surprise anymore. All right. Pops and drops just out of nowhere. That's what happens when you're in the, these range conditions, right? Again, it's all about who has the dominant order flow at the time. Again, a lot of times what will happen is, you may have some dominant order flow, chugging, and then the buyer or seller is complete, and then there's like nothing left, and then it snaps up and snaps down. So the old snaps and traps. It's very hard to model, a clean edge. Like, like for instance, just kind of like right in this area here or right in this area here. Right. Again, this is one of the reasons why, at least for me, unless somebody else has modeled it really well, I don't find that there's a good edge, clean edge. I'm talking about probability edge. Okay. Very hard to model, kind of, just chug, chug, chugs, and all of a sudden a quick down, chug, chug, chugs, in a quick up. It's great to see after the fact, but it's very hard to model something consistent, like that. Right. The only thing I, again, from in terms of what I try to do is I just try to outline what the, you know, upper and lower pivots are. And then if you're going to take a trade, again, it would be in this vicinity here, or with the, this vicinity here, right? And again, you can then determine, again, you can use your technique, right side pivot rule, you know, uh, gets this, use your right side pivot rule, gets this, use a right side pivot rule. Or you can just simply, probe and then put, whatever the requisite stop that you typically use, and then see if it works, right? But outside of those, edges, okay, I have a good image. We haven't looked at that image in a while. Let me see if I can find it. I think it's Be the Lion. Yeah, right. So this is how I view range trading. Okay, everybody see that image? Is that clear? This is how I see range trading. All right, so we're in the middle here, and again, I'm using the profile as an example, but we're basically, you know, the wildebeest, right, are in, you know, that's the majority of the trading that's taken place. And then up at the upper and lower edge, okay, up in the lower edge, that's where the lions are scouting, right? What are they looking for? They're looking for a weak, injured wildebeest, perhaps, all right, or a wildebeest that is straying outside the herd that they can attack. Does that make sense to everybody? This is how I visualize it, okay? And so when we're in a range, and this is what I mean about I don't care about trading in the middle from my own, you know, experience. My own experience. Everybody's different, but my own experience. Trading in the middle is like, you know, I try to be the lion, and the lion will not go in the middle of the wildebeest herd. Why? They're gonna die. They're gonna get trampled. So that what do? They hang out on the edges. They bide their time. They look for an you know, opportunity. So when that, you know, weak, or could be even a, you know, a juvenile wildebeest kind of strays outside the herd or gets pushed, right, outside the herd, that's fair game. And that's what the lions look for. So when we're looking at that, and you know, and again, in relation to trading, right, think about, right, where are the lions, right? The lions are on the upper and lower edges, right? Where's the wildebeest? WB, all right, for wildebeest. They're in the middle. All right. So that is my visualization of why I don't trade the middle. I want to be the lion. If we're going to do anything, I want to wait for a stray. Now, there's not really any easy strays here, right? Still within the range. But again, you get the idea, okay, where, you know, if something got pushed outside, right, then that becomes fair game, right? Pushes up outside. It's not necessarily a breakout, right? But somebody, or, you know, something gets pushed outside the edge, then that becomes fair game. Right? So anyways, that's my visualization for, and reason why I don't really care to trade in the middle. And partly for the reason is that I have in the past traded in the middle, you know, thought I was, you know, super trader. And what happened? I got trampled. Market reversed on me, you know, and my stop, you know, again, just going to get stopped out. And so it's just, to me, it's not worth it. It could be worth it to somebody else. And if somebody has, you know, an active strategy that takes advantage of that, go right ahead. God bless. Right? I'm sure there is. But I have never been able to really capture one that's effective. But this isn't, you know, this type of activity, the big institutions, this is what they look for. Why? Because they need the liquidity. And so what they're doing is they're getting the liquidity back and forth from each other. Right? So you got some institutions wants to buy, right? Some wants to sell. Hey, this is where we can do business. Right? Let's do as much business as we can until one side collectively, you know, is cleaned up, and then the other side, you know, takes full dominant reign. I have an image for everything. You know what I've done over the years, I've created images that help describe how I view, price action and so forth. There's nothing better than having some sort of visualized aid that can help you, solidify why do I do this? Why do I do that? Kind of like it's similar to like archetypes having some sort of, you know, uh, image as an archetype, similar to that, but it's more kind of this is the reason why I don't diddle in the middle. This is the reason why I like, you know, breakout first pullbacks, you know, this is why I'm identifying, what's the lean, where's the zone, what are the key areas, that the market would need to do, move above, move below. Never predicting, always preparing. SanDisk has fallen more than $500 a share in just 3 trading days, shaving off a third of its total valuation. Woohoo. Thank you for flying. PTG Airlines. All right, we're going to get a breakout somewhere. We're going to at least get an attempt to. Maybe they're going to try here. We'll see. Again, most breakouts are failures. It doesn't mean they can't try.
Cycle high alert. First pullback, take three.
Well, so much for that attempt, right? So I have a question. Does anybody have an idea of how to identify the potential for a breakout, directional breakout? Do you have any clue that may give you the potential for a breakout? Anybody care to share? Okay.
Keep this down for keep this
Okay. Connect the magnificent. All right. So one of the ways that again I was taught years ago, right? And I'm gonna get rid of the values. Let's see. Hold on a sec. Okay. I cleaned up the chart quite a bit here. Right. So you know that I've um, outlined, right? So what we want to do is, right, we go the high, the low, right, and the midpoint. Okay, everybody knows how we frame out the markets, ranges, high, low, midpoint. That's our compass. Okay. And again, it doesn't have to be perfect. This is just more of a demonstration of a concept, right? Versus, pinpoint accuracy. So what I typically like to do is, when we can see that it's clearly, in a range, right? So you can identify it, right? You can go high, low. Let's just map it out manually here, right? The swings, okay? All right. So that's the swings being mapped out. So we can identify the, key highs, key lows, all right? And another thing you want to do, and again, it always starts from, the left hand. You have to identify some key high, some key low, and then determine whether or not the action is staying within those high lows. So then what we look for is, okay, so the magnitude, so you get your first high low. And then what happened to the next swing? It pretty much went, near to 100% of that swing, right? And then what happens? The next swing up is, again, approximately 100%. Not exactly. Then what happens to the next swing? All the way back down, similar, right? So they're equal, relatively equal swings. Let's just, for conceptual purposes, let's call it that. Okay? So if we kind of visualize the midpoint, this is kind of easy today only because you got a profile, all right, that is well balanced. Everybody following along so far? So you have, 100%, let's just call it 100, right? 100, 100, meaning that it's pretty much gone the full range. Is everybody following along with me? Raise your hands. Okay. So it's going from high to low, high to low. At some point,
It's like the line of
okay, great. So at some point, the next swing, okay, at some point, a swing, let's put it that way. All right, a swing does not go the 100%. Okay, thank you, Bruce. Right? So in this case, how far did this swing go? This one right here, right? Let's call it 50, right? That's where roughly the area is. So this one's gone 50. So this is what's called shortening of the swing. It's a shorter swing. What is happening here? What's happening here is that the strength of the buyers and sellers previously have been equal, right? They've been able to push it down, then all the way push it back up and push it back down within roughly the context of the range, right? When we begin to see a shortening of the swing, such as this, right, odds begin to increase directionally that the market may want to begin to push either higher, in this case it would be higher, or lower if it was reversed. It's not a guarantee. What we're trying to look is what is the change of character, right? What's the change of character? The character here is high low and then matching roughly high low and then matching again roughly high low. So when we get a COC, a change of character, what are we looking for? To try to handicap, not predict, but try to say, well, what is the likelihood of it moving higher? What is the likelihood of moving lower? Well, I don't really know until I start seeing some evidence. So again, this is all evidence-based, right? So one of the evidences, again, this is how I was taught way back when, is if we start seeing both buyers and sellers here, right? And you can see the cluster of activity here. There's essentially a cluster of activity here, right? They're pretty well balanced overall. The character kind of changed here where this activity stayed roughly above the 50% point. Okay, it did not go down any longer. So as a result, what we're getting is then we're getting further into sellers that pushed it down in these prior swings, right? are not as strong any longer. See how the change of character begins to unfold? Okay. And so even with this little dip, secondary dip here, what happened? It stopped right around the 50% point. What did it do? Came back up again. So this is, I'm not saying it's going to explode higher. We don't know. What we want to recognize here is there's a change of character. And this is with the idea of reading price action, right? And again, you don't know this until you get some swings having already unfolded. But this is one of the ways in terms of, particularly when we have a kind of a defined range action, right? What is the likelihood of, prices moving higher or lower? Well, I need to see some sort of change in the swings, right? The swings have been pretty much equal, right? Well, I need to see a change, and there's the change, a shorten of the swing. So keep this in mind, not only for now, but for next, time we encounter some sort of a defined range action. Think about that, right? So, and again, it's not perfect where it's going to tick exactly, it never is. But this will help give you some guidance. And now look, right, that the pressure now is beginning, obviously, further, upside. So this is purely price action based. Yes, you can use your CCI, you can use other tools to help, kind of help guide you. But if you frame out the market with this high-low midpoint using kind of these rectangle ideas, right? And then where approximately, where's the change taking place? Or is there a change taking place? Then what happens is these pullbacks here to the mid area become playable with an anticipation of prices moving outside the current defined range. All right. So something to keep in mind. Everybody take a snapshot, or you have your videos running for something like this, because I'm going to take that image off the screen to clean things up. Okay. So think about that next time. Draw this out on your own chart. Make some of your own notations on your own chart. This is a good educational piece because the market's provided us a nice range structure. And this is not predictive. And I say it's not predictive. What we're doing, we're trying to, you actually have your odds begin to favor the potential for further upside in this case. And the evidence is because the prior swings are no longer as deep as they once were. Okay, so hopefully that helps a little bit in terms of, we didn't get too many trade action activities out of this today, but let's get some educational benefit out of this, right? And if you have your, zigzag indicator on that, that may help outline, your zigzags. But I like to do things manually first, because if you do things manually, I don't know. To me, it's, you know, I can see, I can feel it. I can see it in my mouse. I'm drawing it. It's registering in my head. You can see how the whole change of character occurred here, right? The shortening of it, and then which leads to, look at that, led to a breakout. Okay, so this is a way of, you can kind of discount the potential for a move outside the current range. I'm not saying it's the only way. This is one of the ways that I was taught back when I was a market maker, right? And we weren't using these fancy indicators, that we have, right? The only indicator we have was price action. And really, the best indicator that you have is knowledge, is some knowledge about price action. It's not the indicator or whatever, it's knowledge. That's your best edge. So, um,
cycle idler.
All right, and we do actually have on the website, and again, if you guys haven't visited the members area in quite some time, again, summertime's a very good time to do that. Okay, here's one. Okay, identifying. I don't know if you'll get this or not, but yeah, let me just post this. All right, this is in the website on the members area. Right, identifying non-trend days. Again, I go through an explanation. It's kind of an old explanation, but you can see, in some of the things that I used back in the day. It's been quite some time. I don't necessarily have all these indicators like I did once before, but you can still see the kind of the nature of what that's about. All right. All right. Non-trend day. If you want to specify some trading rules for yourself. Okay, I got some, non-trend day trading rules if you want. Okay, identifying trend days. All this is in the educational area on the website. Okay, so if you haven't spent any time there in quite some time, sometimes since it's relatively slower, always a good time to take a look at that stuff. Right. All right, questions, comments, considerations? Anybody have any thoughts? All right, we're coming up to 11 o'clock, and this is typically where we cut the stream off. Not the greatest of P&L opportunities today. We had a better one yesterday, but I think we get some educational value out of this. And of course, when you begin to start adding in your various indies that you use, right? And again, do the price action things first. Draw out high-low ranges. Do that first. Then when you start overlaying the indicators like the EMAs here, okay, you can begin to see, like, if you've identified that 50% point, you can start to see that, again, on average here, right, the EMAs are now beginning to favor, the upside. Now, you could say, well, weren't they favoring the downside here? Yes, they were, right? And weren't they favoring the upside here? Not really. Look at the angle of those EMAs there. Not really, right? So I would say no. How about here to the downside? Yes, but it never really broke below the range, right? But the average price, right? Remember, these EMAs are just representative of the average price, not the price, but the average of prices, right? So the value of recent price action. So yes, with price below those in the EMAs there in that position, dipping down a little bit, okay, I'm not interested in buying. But again, I'm more interested in seeing how the overall swings are happening. And then when we start seeing the shortening of the swing, and now we see a much more well-defined EMA structure. All right. So this is the time in this area here that you could begin to lean into the potential for the market moving higher. Remember, these zones that I'm creating here, they're just my zones. Market doesn't know what those zones are. It's just for visual purposes for what I do to help describe framing out the price action. So the market doesn't know that. But the market does know one thing. It does know how far it has swung high and swung low. It does know that. And it also, you know, again, the fact that the sellers here were not making any further progress to the downside, and the buyers, you know, got much more perhaps aggressive in absorbing those sellers. Again, there's your change of character. And it doesn't happen in, one or two 750 tick bars. It happens over a period of time. So you get that's why I really lean a lot on these EMAs when I'm looking at price action. I'm really leaning on it because those are the averages. So if all the averages over a period of time are beginning to rise, okay, then I'm looking for when the price, which is obviously a lot faster, dips down into the averages, which are obviously much slower,
circle 5,
giving us an opportunity. I want to buy price into rising, slower moving averages. Again, that's why we refer to that as the river, the current. The current has changed. There's a change of character. Does this all make sense? Trying to slow it down in the concept description. But this is the stuff that I was taught back in the day. All right. And again, it's I think it's helpful. It's always been helpful for me. Take me to the river. All right. Hey, if that song helps you remember it, Bruce is posting here. If that song help you remember it, use it. You know, use whatever it necessary. Don't make it sound. What you don't want to do with trading is you don't want to the technical jargon of technical analysis and all that. Get rid of that if you can. Try to make it as uh, personal in terms of how you view things. I refer to as a river, the current of the river. Sometimes I refer to these for you pilots out there, right? Sometimes I refer to these as thunderstorms, right? A line, on the map, right? A line of thunderstorms. Okay. So if these are thunderstorms here, right? Again, a line of thunderstorms, and you can put X's for like lightning, right? These are all X's to represent lightning. So if there's thunderstorms and lightning, and I have my little airplane here, I'm trying to go this direction. I want to get to my destination up over here. Well, I'm not going through those thunderstorms, am I? I'll have to find another either way around it, which could take me quite a bit distance away, or some of the best, if there's no real alternate that I can use, I'll just go land somewhere and go grab a hamburger, right? And then wait for that to